Hello, everybody. Happy Tuesday, and welcome to another episode of Gold Rush with your boys, Sam Gatlin and Jason Pers here. We have a lot to talk about today. Silver might be discussed today, but energy certainly has my attention as well, Jason. I don't know if you've noticed, but ExxonMobil, the largest American energy stock, is on pace to close today at a brand new all-time high.
Nice. I did not. This is why Sam's the best. I sometimes miss certain things, and Sam's always just on point with everything across the board. I could ask Sam something about biotech. I could ask you about some weird speculative stock in Asia somewhere, and then also the energy sector, the metals, and so on. You're always on everything. I appreciate that about you, Sam.
Hey, I do what I can, Jason. I see we have a very lively chat today. Wavy McFly says, "Let's go!" Yeah, Wavy, what's up? Um, Yeah, thank you all for being here. Let us know if you have any questions in the YouTube chat. And if you are watching this stream on our Twitter accounts, hop on over to YouTube so you can comment on anything. And of course, we'd appreciate it if you could like and subscribe to this channel to support us and that whole spiel. We want to keep bringing you awesome content, so show us some love. We give you a lot of insights here, and that's all we ask of you. So without further ado, if you will throw up slide number 2, my main man Gene Gote behind the scenes. Jason, I know you know about this data point. You didn't know about the ExxonMobil earlier, but silver is ripping to new all-time highs. We've been talking about this $73 level as the first target for silver futures, and we immediately alerted Gold Rush members when our first objective was hit, and we kind of thought that, silver might consolidate here and just churn sideways, carve out some type of bullish continuation pattern, but Jason, it has not pussyfooted around at all. It's just screaming to new all-time highs, and it looks like it wants that next Fibonacci extension level of 111. So we're going to get a $100 roll in the silver, or not. What do you think?
Yeah, man, this is a wild one. And once again, I think everybody in this question today is silver dead? I keep getting questions about this. Is this thing over? When does it end? Nobody's going to know that. I mean, the same people who were telling you that silver was dead were telling you it at 30, 40, 50. I mean, everybody thought it was done at 50. Sam and I
You
were
know,
the
it's really easy to tell like who has missed this rally, Jason. These angry
yeah,
bears just keep trying to call a top.
yeah.
You
And
know,
and,
I,
and once
yeah.
again, when it goes down like 2% or 5% or 10%, they're gonna blow up and be like, see, told you so, so right about it. Once again, this is how markets work. They go up. We follow trends here at Gold Rush. As the trend is up until the trend breaks. Like I asked the question today on Twitter, when does silver end? What's the price target for everybody? And the one person actually answered it correctly, which is when the trend breaks. When the trend breaks, this thing's over. At the moment, does that trend look like it's broken? Absolutely not. Um, will it come down like a ton of bricks at some point? It could, but it could go a lot higher first. We just don't know. So once again, keep running a trailing stop, moving up your stops as you're going along. Like now, an easy place to put a stop is under that 73 level that Sam has up there. If you're a short-term trader, so you could have a stop under that 73 level, targeting 111. And we could hit it. At the end of last year, we were talking about the fact that silver could hit 75 by year end, and it actually did, which is very surprising. But it actually hit 75 by year end. Now we're at the point where it's like now 111 or 100 even is a chip shot away. I think it's going to be basically magnetized to that level and probably hit around 100 before this thing's over. So once again, I think we have some more upside to go. I think it's just continue to ride the trend, and when we hit 100, see how it reacts to that level. Markets don't care about even numbers, but people do. So you could see some volatility around that zone. But then after we get above that, getting to 111, I think is going to be easy.
Yeah, Jason, I'm totally with you. And, yesterday in our Gold Rush note for our members, we talked about some key intermarket ratios, and I want to run through those for everyone to see because, it's not just the price action alone that we're seeing in silver futures, but some of the most risk-on ratios in precious metals. We're also seeing them surge higher. And one of my favorites, is the junior silver miners relative to the big silver miners. That's SILJ over SIL. And we recently pointed this out for our members, saying, this is testing a key level of former resistance. If this is a true uptrend, it should hold a support. And not only did it hold a support, Jason, but it ripped to new multi-year highs last week. And looks like it's in the early stages of a fresh leg higher. Another one we pointed out was this GDX GLD ratio. So that's the gold stocks over gold, the rock. And it looks the exact same as silver relative to gold, which we all know is ripping to the highest level since 2013. And I think a similar catch-up move is coming in the GDX GLD, and that is very, very risk-on for precious metals. In true precious metal bull markets, you see the stocks dramatically outperform the rocks, and we have seen that, but I think there is further room to run in these key intermarket ratios. What do you think about that, Jason? Am I
Yeah, I think
crazy? Is it not going to break out?
I see that's the thing that's going to be the hardest thing for people to comprehend here is how commodities move. Commodities don't move like stocks where it's like I can understand the resistance and I can start selling it perfectly at every resistance zone. Commodities really trend. Stocks are very mean reverting. The reason that is that most commodities, there's not a ton of news around. Gold, silver right now, there's a lot, but not nearly as much as if you're looking at Apple stock, you're looking at Tesla and so on. There's always something coming out about these things. So when these things move, they're usually in some sort of supply deficit, some sort of demand increase. Something is going on to make these things happen in a big way. And then not to mention there's people, and most people are crazy. So they start to buy into these things as they're moving up in really wild ways again and again, which drives the price higher. So I think this is absolutely gonna start catching up. I think we could even see GDX getting back to those 2011 highs. I think this ratio for silver gold, we can get back to those 2011 highs as well.
And we have a question here from Alpha Charts asking our thoughts on copper relative to gold. I did not bring that chart along today, but it's looking kind of nice, Jason. I don't know if you've been watching that copper gold ratio.
It's starting to move in copper's direction.
Kind of. I mean, kind of, sort of. It's in a massive drawdown. It's been in a prolonged downtrend. So, there's a lot of work to do there for sure, but it's looking pretty nice. And if you can look at some other ratios of, look at something like XME relative to stocks or COPX relative to stocks, a lot of these key intermarket ratios for not just copper, but just the base and industrial metals theme in general look really constructive. And, maybe the copper gold ratio doesn't look the best, but maybe that's not the whole story.
No, I agree. I think it's something here where we have to just continue to one look at copper on an absolute basis. Look at it against yields. It looks really good. It's also telling you about global inflation, global growth rates, and so on. So I think copper is still a great place to be. And at some point, it probably will outperform gold. It just ain't happening today.
Totally. And you mentioned yields, Jason. You brought along this chart of the 30-year Treasury yield with the federal funds rate. Are you seeing anything interesting in the bond market right now?
Yeah. So if we're looking Jeremy Powell, my man. But I'm surprised to ever say that. Like nobody would ever expect me, the person who's I'm pretty much against the Fed's existence altogether. But at the same time, I really respect a guy who's going out there and being like, hey, like this doesn't look right. Everybody's pressuring me one direction. I'm still going the other direction. And I think he's seeing the same thing. I mean, if you guys didn't see the press conference, he actually said straight up that there's political pressure. And the reason why they're investigating him is because they want him to lower interest rates and keep them moving lower. So that's very interesting. Haven't seen a Fed chair really go against an administration like that ever. So we'll keep an eye on that one. But I think Powell, if anything, I think he's seeing similar to what I'm seeing, which is If you look at the Fed funds rate, it continues to move lower. You see the 30-year rate. So real people, we get loans from the 30-year rate. So 30-year yield is basically, think of mortgage rates. Think of, if you go to a bank and you want a loan for something, like you're going to get that type of rate and quite above that actually. And then the banks basically can loan from the Fed rate, which is, sometimes that rate's all the way at 0% to 3% and so on. Today it's currently around, I can't read that currently. What's it at, Sam? Can you see that?
No, that's way too small, Jason.
It's too small.
I need
for
to
all
work
of us.
on you, work on your charts with you,
Sam's gonna help me,
yeah.
guys. Don't worry, don't worry. I'm getting, Sam is young and very skilled at the charts. I am not as skilled as Sam. I will completely admit that. But once again, we're looking at the spread between these two things. So basically, as the banks are able to loan from the lower rate themselves and then loan to us at a higher rate, they're making the middle there, which creates more liquidity in the market, which makes the dollar usually move down, which is going to create inflation. And so we've seen in a lot of areas. I mean, like that's the thing. It's not only like we're thinking of inflation and thinking it can happen. Now it's like, okay, let's look at gold, silver. Okay, let's say they don't care about gold and silver. Let's talk about palladium, platinum. Let's say they don't care about that. Okay, now we're seeing the industrial metals. We've got Sam, that next chart, chart 8. So we've got the aluminum, we've got copper, got palladium, we've got zinc, we've got nickel. Like I could go down the list. Everything basically metal is moving higher in a very dramatic fashion. So I think that if we go back to rates, I think Powell is kind of in the same scenario here where he's looking at it and going, hey guys, can you not see what's happening here? And if we continue to lower rates, this is going to be explosive. And I think we've just been building that up over the last year. It's the reason why we've been positioned in the precious metals, going back to a couple years ago, position in silver, platinum, palladium coming into this year. And now, and at the probably midpoint last year, we started positioning in a lot of the industrial metals. I think this is just going to continue and start to move into energy as we move forward. And then Powell's going to be really right at some point. It's going to look really wild. But once again,
Totally. Jason,
this
you
is
were
the
on the morning
landscape we're
show
at.
last week, right after the Venezuela situation, and we have someone in the chat here that says, shout out to Jason for calling the bottom in crude oil last week on the morning show. Can you pick him a lottery ticket?
I
Can't do that, but we can talk about crude oil. So, Jason, I know you were talking a lot about that news failure event. A lot of people were expecting a massive move down in crude oil futures after that Venezuela news hit the wires, but you didn't see that. You saw this multi-decade trend line hold as support. This was resistance, 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 resistance. Then you broke out in 2020, 2021, and you've held that trend line as support since then. And I'm not Mr. Trendline guy or anything. I'm more of a horizontal support and resistance kind of guy myself. I mean, that's just my personal preference. I know there's a lot of trendline people out there, and I respect it, but I'm not usually talking about diagonal trend lines, but this one really stands out, Jason. It's so clean. The market continues to respect this. And I think this must have been part of your thought process. I don't know. Explain to us what you were thinking last Monday.
So that it wasn't, so this is a great chart, but it wasn't exactly this as much as it's just okay for the last, I want to say basically since Donald Trump's got in, he's basically been able to say, even in an environment where inflation's been sticky, hey, I want gasoline under $2. I want gasoline under $2. Any bit of news on drill baby drill or gasoline under $2, we've seen the price of crude oil drop every single time. And then basically you have the biggest event that's happened in, I don't know, maybe definitely his administration for crude oil, and a reason for it to just continue to plummet in a very large way. And not thinking that I think structurally that made sense. I'm saying just based on the way the news goes. I thought it could open down. I was either looking for it to open down and then start to move up in a big way. And really it just barely opened down and then it moved up. And basically, I think I wrote you, Sam, and I said in the morning, if it's still like this, I'm going to get on the morning show and talk about it. So basically what I was seeing is this event that should have been one of the biggest catalysts for crude oil to move down. Crude oil actually moved up. And it was, nobody at this point, it's like everybody's off sides this thing. Everybody's short. Look at the COT reports. Everybody's on the other side of that as well. So the COT reports basically saying the dumb money extremely short, the smart money extremely long at this point. And this is something that happens usually at bottoms. And so we're seeing Sam's always highlighting the XLE, OIH, individual energy stocks, and so on. These are shorted very heavily as well. So
Totally. And we had Josh Young on our show last week, Jason. And for all of you that missed that very special episode of Gold Rush, I highly encourage you to go back to the Stock Market TV archive and review that, because Josh Young, he is absolutely brilliant, Jason. I learn something every time I talk to him, and we come from very different angles. I'm very much a technician. I can't tell you what all of these companies are doing and what their balance sheets look like and their cash flow statements and everything like that. But Josh Young can do that. He knows about all of the supply and demand dynamics that are happening in the energy markets, like crude oil, for example. And so, yeah, I learned a lot from him. And probably the number one thing that stood out to me was how bullish he was on the services names. And, from a technical standpoint, I have been very, very bullish on the services names. As you mentioned, you have the highest short interest there in years, but you also have one of the cleanest charts out there, Jason. This is our Gold Rush Energy Equipment and Services Index, which holds a basket of some of the largest services names in the energy complex, and it's ripping above that pre-COVID peak, and in my opinion, entering a brand new primary uptrend.
yeah, I think that if we continue to look at these energy stocks, it's like they're really starting to make their move. And once again, it's like this is what happens in markets. Every single person, when you start to get a trade and you're like, look at this chart. You've got red arrow here, tries to make a breakout, tries to make a breakout, tries to make a breakout. Everybody gets excited. And then the time it really makes a breakout, by this point, nobody cares anymore. Everybody's moved on. There's better trades out there. I love when people say that's the most ridiculous thing to say. There's an easier trade. There's something else. There's some shiny object over here that you need to find. Maybe that's gold and silver, which has worked very well. But if you're looking at this just for the trade, most of the time there's going to be a bunch of times it's going to fake you out, hurt you, make you upset, and you're going to hate the trade. The hardest thing to do is just take the next one. Take the next breakout. Do I know exactly where this ends up? No. However, most of the time when you have everybody on one side of the boat, basically everybody short, everybody hates this trade. It's finally hated enough to a certain point. You got the Venezuela news situation. You have the COT report basically pointing to more upside in oil. You basically have every single thing, every ingredient you want to see the energy sector move higher. I think it's time for it to move higher. And also, like I've been saying since last year, this is the seasonal period that if it's going to do it, it's going to do it right now. So I do think that this is a trade you want to pay attention to. Also with bond yields, the 30-year yield, I'd like to see that break out with XLE and the energy sector, and that would tell me that probably oil's really going to follow this thing.
Well, you're not far away, Jason, and I know you've been talking about global yields a lot as well. We didn't bring the chart along today, but man, global yields continue to hang in there very strong, particularly Germany, the German 30-year yield. So are you seeing any interesting developments there that might suggest a breakout in the US 30-year yield is coming? Because, yeah, I mean, look at this chart. It's right there. It's a stone's throw away.
Every country is kind of looking very similar to, they're not similar to this even. They're all higher than this, but they're all breaking out. I would be very surprised if the US just stays right here and that's the end of it. Granted, I don't know what type of possible plans can come into play. Are they going to do yield curve control where the Fed starts to buy 30-year bonds? Are they going to do something to boost the dollar? I don't know. However, I do see here like the rest of the global yields are moving higher. Most of these countries try to do these same types of monetary policy as well. It's not really working. So I do think what the bond market is sniffing out is that inflation is coming back and probably in a nasty way. I mean, look at copper. Copper is moving to the upside. All of these sectors we keep talking about and highlighting are moving in such a big way, but everybody keeps pointing to the CPI reports. Oh my God, the CPI reports, they're not doing anything. No shit, guys.
The CPI report is like the biggest scam out there, right, Jason?
Yeah, number one, it's like if it is something that's a heavy weighting in there that's moving it higher, they're just going to take it out. That's number one. Number two is if we're looking at these prices for aluminum and like let's say all these metals and so on that go in semiconductors, that go in our phones, that go in cars, that go in houses, everything, and they're moving up in such a big way, and we're not seeing it in the CPI report. Why is that? Well, it's because it takes time for that to get into the system. They're not taking like the CPI isn't a weighting of copper and all these different commodities that we're trading. It's a weighting of what's actually people are buying and taking to put in their home. So they're going to the grocery store, they're buying a new phone, they're buying a new car, they're buying a house, whatever it is. But those prices don't show up immediately. So it's going to take some time. But I think at some point we're going to have a very crazy CPI report and people are going to go, holy shit. And the only thing really holding it back a little bit is gasoline and oil. Gasoline, oil start to get a move. It's going to be wild.
I don't think it's far away, Jason. We're
I
already
don't
seeing
even.
crazy moves in, I mean, I mentioned the services names. We're seeing thermal coal make a big, big move out of this consolidation and ripping to new highs. And man, I like these coal names a lot. And we're also seeing the Breakwave Tanker Shipping ETF, BWET. This is something we've been talking about for a long time, Jason, really since early 2025 when it started to ramp higher and retest this shelf of former highs. And you got a nasty throwback here, but you have come back with a vengeance in the BWET. And you're seeing a very similar story in the marine shippers. So this is our equally weighted basket of marine shippers. And ever since climbing out of this textbook bearish to bullish reversal pattern, it's been pretty much up only, Jason. So what do you think this is telling us about the supply and demand dynamics in the energy market in particular, but maybe you have some insights into the grains as well, because I know the grains continue to carve out those really nice bottoming patterns, and if you've studied these cycles historically, whenever energy starts to move, these grains are not far behind. Things like corn and wheat look really interesting to me down here at very depressed levels.
Yeah, I mean, look at, Rick came up with this great chart. I have no idea sometimes how he finds the correlations he does. But Rick comes up with this great chart the other day and he goes, look at Moo, and the CPI, and basically shows that like Moo kind of front runs the CPI report and Moo's really close. I mean, it might have already hit it. I shared about it on
Oh, I
Saturday.
have a moo chart. I'm glad you mentioned it, Jason.
Nice. There we go. So, it's getting very close to making a new high. That would be multi-year highs. And if it does that, this is really going to move. These are companies like Scott's Miracle Grow, John Deere, and so on. A lot of these agribusiness companies that haven't gotten much love lately, but they do move and they do trend really nicely. So there'll be some money to be made there coming up soon. So I'm sure we'll be highlighting that soon enough. But if we look at this compared to the shippers, I mean, I've been talking about the shipping stocks a lot. Sam and I have also been highlighting that quite a bit. If we're looking at, some of these marine shippers or oil shippers or dry bulk shipping, all of that whole area looks amazing at the moment. And usually that front runs the move into things like grains, front runs the move into things like energy. So I really do think like this whole sector is really set to take off. And once again, like people are like, corn, that's boring. I mean, I'm in Ohio. I'm surrounded by the shit everywhere.
Me too. My family owns a pretty large farm operation, so we're very leveraged to not only livestock but also the
corn as
grains.
well.
So like these are
Yeah.
like the first things I'm checking in the morning, like
Yeah.
what's happening in the markets.
And so even like down the street from my house, I have there's statues of corn, that are actually in Ohio that are
You
very
have corn
intimate.
statues?
There's
I don't
corn
have any of
statues.
those.
Thank God you don't. They're
Dude,
ridiculous.
send me some pictures of your corn statues. I want
I
to see
will.
them.
There's actually somebody who made a really funny video. If anybody remembers in the chat, the It's Corn video. Oh my God, that was so funny. That made me die. But it's about those statues and so on. It's hilarious. But anyways, corn, soybeans, like when you talk, like when I started trading, I thought that was like it, man. I was like, I want to trade the grains because I would hear all these stories. Like read Market Wizards 1, you hear these stories about soybeans and corn and so on. And like most people think these are very boring. It's like, no, these are very leveraged products that you can make a shit ton of money on. And so that's kind of what I look at it for. And also it's like I'm surrounded by it. I kind of understand the market from a fundamental perspective. But once again, that doesn't matter nearly as much as the price. So really waiting for these things to break out. Soybeans has already made a little bit of a move. It is in a buy signal currently. But it's really kind of just chopping around a little bit. Corn is moving up there, getting closer and closer to a full buy signal. Wheat is chopping around a little bit, not quite to a full buy signal yet either. So, keep these on your radar, because when these start to move, it's also going to tell you a lot about inflation. And also, this also helps you as a person just basically buying groceries. Like, I think of it too as like, okay, my portfolio is basically hedging me from inflation all the time. So if I go to the grocery store and I have to spend an extra, let's say $100 at the grocery store, it's like, who cares? I'm leveraged to most of these things. When, for example, when steak prices continue to move higher, I'm owning live cattle and feeder cattle, and that's basically making a lot more than what I had to pay in grocery bills and so on. Same with like gasoline prices. You start to get energy, you're in energy stocks, and gasoline prices, let's say they rise, you're still making money there. So at the end of the day, it's like this type of trading and understanding the commodities market also protects your portfolio from inflation, protects your life from inflation, your family from inflation. So I think that matters as well. But I think here is a great time to have for everybody to have this chart up on their watch list. Look inside of this ETF for individual names. Be ready to buy them. Also, countries in South America have a lot of agribusiness.
Hey,
So
I'm glad you mentioned these commodity nations, Jason. I wanted to finish today's show with the Gold Rush Commodity Nations Index ripping to new highs. This includes countries like Australia, Brazil, Canada, Chile, Indonesia. You can see the full list there, but man, these commodity nations continue to work. And I know your fund has a lot of commodity nations in it, Jason. Not many tech stocks in your fund. It's kind of a theme right now. These more value-oriented nations are doing much better than places like the United States that have way too much technology exposure, which has been a great move over the past, call it 15 years. But right now we are in an inflationary environment where those stocks are not in favor, and you're seeing the market make that message very clear to us in real time here.
Yeah, I think to me this is the most important trade of probably the next 5 years, which is understanding that, if the dollar is in a real down cycle, unless something shifts. Now, once again, markets are pretty dynamic. There's going to be situations where the yield curve starts to move the other direction and so on. At the moment, we're in a bull steepening. At the moment, the dollar is weak. Yes, everybody's going to write me every time the dollar bounces. You can do that. I'm just not. That's way too short term for my time frame. I'm always excited to hear from everybody and chat with people, but in my time frame, I'm going to tell you that hey, it's still in a massive primary downtrend at the moment. And so, as long as we're seeing that massive primary downtrend, even with the bounces, I want to be long these areas. I want to look at South Africa, Africa generally. Saudi Arabia is also one that's going to be interesting, I think, coming up, especially if energy starts to move. I don't think it's the most interesting thing yet, but if energy starts to move, I really want to be long it. Canada was one of the best performing developed nations last year as well. A lot of people don't remember that or even think about that. Indonesia could be an interesting one. Malaysia is another one I'm also looking at as well. So if you continue to kind of go through this entire list of all these different commodity nations and then find stocks inside of it, you'll see that there's a lot of money to still be made here. I think too many people are kind of coming up with different ideas. Hey, this can't continue. Hey, over the last, what is it, since 2008, basically, we basically have had the all of the emerging markets, anything outside the United States underperformed quite massively. And now it's starting to outperform again, where we're seeing this outperformance in the commodity nations or just nations outside of the United States generally. And people are writing it off as a 1 year event. This can't continue. It'll slow down and it will chop around at times and it will be messy at points. However, I think this is here to stay. And the biggest driver is always going to be the dollar. So keep watching the dollar, pay attention to that. And as long as the dollar's in a downtrend, I want to own the commodity nations. I want to own a lot of things outside of the United States currently.
Totally, Jason. So if you liked what we had to say today and you are looking for some trade ideas to take advantage of these themes we're seeing in the markets right now, you should check out what we're doing at All Star Charts Gold Rush. We have a link in the description on YouTube so you can learn more, but we give you a 30-day money back guarantee. So there's absolutely no risk at all to come and join us and see what we're doing. And if for some reason it's not for you, we'll give you your money back, no questions asked. But I highly encourage you to check out what we're doing because we are crushing it, Jason. We've kept it high level today, but we didn't really go into any trade ideas that we've highlighted. But there are plenty of trade ideas that are absolutely crushing, putting up triple-digit returns in a lot of these stocks.
Yes, and I think that's going to continue. So just continue to ride these trends for you guys who are actual subscribers at Gold Rush. Continue to ride these trends in these trades. Continue to look for the targets that Sam's put out, or use a trailing stop to manage risk. But this is a ripper, and we're seeing the commodity cycle work exactly how we thought it probably would. The only thing to really catch up this year is energy. If we start to see energy catch up, we've kind of seen it across the board work the way it's supposed to. So really just continue to watch these trades we put out, continue to use a trailing stop or use the targets that we put out, and ride the trend and enjoy the ride.
Totally. Leslie in the chat says they made back their subscription and more in 1 month. And that's right. Not only can you get your money back if you aren't happy with what we're doing, but you could actually pay for an entire membership with just one trade. So yeah, why not try it out? Yeah, I appreciate everybody being here. We've had a very fun chat today, Jason. A lot of action there. I appreciate all of you being here.
Got Jonathan,
with us.
Free Lee, Jack,
Man,
Cement. I've been seeing Cement Grays up here a lot. I'm curious if he's a cement guy. That'd be very interesting. But
yeah.
Jerry's on here. So always happy to see you guys. Thank you guys for being so awesome every single week and coming on here and joining us.
You guys are awesome. We will catch you again next week for another episode of Gold Rush here on Stock Market TV. Until then, try to catch some trends and make some money.
Later, guys.